Much for that. Let's also invite Jai Bala of cashthechaos.com on the show now. Jai, looks like 25,000 is taking us a little while. Yesterday we got precariously close to it, and today, there's been that sell-off taking place in the last 10-15 minutes. What's the setup for the near term?
Hi, good to be here, Rima. It's more than the 25,000 level for the Nifty. It's the global macro that's going to weigh on the global equity markets from this point onwards. Yes, 25,000 could be a psychological level, but in my opinion, if this level had to get taken out, there's possibility of one more high, about close to 25,600. But we should be watching supports rather than resistance from this point onwards. We have possibly turned in the tech-driven, AI-driven rally. There are indications that the U.S. tech stocks have topped, and so that's important. Important macro that you're watching. Nvidia is the 50% of the global macro. That's broken significant support. So watch significant support on the Nifty. Early warning signal for the Nifty would be if it were to close below 24,700. That'll be a first warning. But critical trend support is still at 24,076. As long as the July 23rd low holds for the Nifty and what 24,076, we are okay for the market, but we should be watching supports.
Okay. Good to have you, Jay. So, just looking at the sudden volatility that the market is in the midst of, would you be looking at any index trades here at all? Nifty, Bank Nifty? Otherwise, if there are any specific stock trades from a positional standpoint that you have in mind, do share.
That's right. I'll be watching for short side trades if Nifty were to close below 24,700. And until that point, I'm not touching any of the mainline indices. But when it comes to specific stock indices, the auto sector is absolutely critical. This bull market is likely to continue as long as the auto sector can hold above the July 23rd low. I have two bullish setups on the auto ancillary space. One is Exide, long on Exide, with a stop loss of about 523, with a price objective close to 650. And another long on Samvardhana Motherson Sumi, a stop loss about 181, the price objective of 220. But what should be implemented along with this is that we should be going down to about 25% of usual allocation, because as I said earlier, the global setup is such that I'm anticipating a rise for the SOX index, which is likely to be a counter trend bounce. And then I'm anticipating a sharp sell-off to start at about 5,600 price level on the SOX index and see strong price rejection. If that were to happen, I'll be very cautious on all the longs.
You're saying you're expecting, some sort of an uptrend, counter-trend rally on global indices. I missed the name of the index, and also just tell us about the US market itself. This distribution that we're seeing, the move away from the Mag 7, with the Russell doing a little better. What do you make of this change in trading patterns there?
The index I spoke about is the Philadelphia Semiconductor Index, the SOX index. So I anticipate bounce towards 5,600, almost the same level for the S&P 500. If the markets were to see strong price rejection from for both these indices from this level, that's an indication that the top is already in place, and I'll be anticipating a break of the last week's low, or last Thursday's low. So that's the important benchmark for me. The overall setup for the US market is that the MAX 7, the FANG index, which is the NY FANG for you on the Reuters score. And if you look at the NASDAQ, NASDAQ index as well as the E-mini NASDAQ index, they are likely to see a bounce somewhere towards on the futures NASDAQ NQ. The symbol, you're likely to see a bounce somewhere about 20,155 and see a strong price rejection. That's my anticipation. And if you look at the yields too, they are looking, my anticipation was for a drop towards 3.7, but it's holding pretty well, just about 410, 420 pips. So if tomorrow, post the Fed meeting, we have to see, less choppy move towards the downside and pull back to the higher side, that's an early indication that we are likely to see stronger and earlier yields rise, and there are no rate cuts coming this year, which was my earlier projection in January itself. So watch out for these signs on the key macros.
Okay, flattening out completely now, and it's not just banks.
The other names include something like a Kansai Nerolac, where numbers have been well received by the market. So plenty of individual stocks catching the eye. Jai, anything interesting you're noticing in the consumer space? A couple of stocks, I mean, Colgate reacting to good numbers today, so it's more earnings driven. There's Nykaa, which is looking very strong this afternoon as well. Nerolac we discussed. Anything in consumer that you like at this point?
Yeah, I do definitely like the index itself. As I discussed 2 weeks back, I said that even though the FMCG index has crossed 60,000, anticipating higher highs to come through, Colgate that you mentioned a few moments ago, even that's looking attractive and momentum is extremely strong, possibly a defensive play if the market were to turn down. And the objective remains somewhere close to 3,600 to 3,800 for Colgate. So I like Colgate from the space.
Okay.
Jai, anything else interesting that you're noticing in charts? Gold, for instance, so much chatter here in the local market because of the customs duty cut. Prices have moved all over the place. But overall on the charts, any advice here? Oil, for that matter, oil has been moving down despite all this talk on what's happening in the Middle East with Israel. Prices have been cooling down quite a bit.
That's right. The medium-term trend for Brent is quite clear, but it's not clear in the short term. It's got one more higher high to come through, somewhere close to 87, 88. But if Brent were to break below 76, I think the medium-term trend towards $50 and lower has already begun, although it's a little bit late to recognize. When it comes to precious metals, I'm still bullish, but I don't like the short-term price action. As long as gold can hold about 2,200, I think the price objective remains towards 2,600. As long as silver stays above 26, the objective states is focused towards 33.5 and $34. But the copper has actually broken down. We had discussed this on the 21st of May when the COMEX copper was making a high and forecasted a 10% drop. It's dropped 10% and done much more. So this is telling an important warning on the macro side too. So keep this also in consideration.
Okay, I think, Jai, we'll leave it there.